A wise woman once said, if you're waiting for the dip, it'll never happen. But if you go all in, it'll keep dipping. Hey guys, Happy New Year. If you're new to my channel, I'm DeFi Bae, crypto native, NFT trader, and artist. And for all of my subscribers, a big welcome back. So it's 2023 and the crypto bear markets are still pretty boring, but that's exactly why I want to talk about it and go over some of the potential opportunities building here. And then of course I'll share with you what I think is the best $1,500 crypto portfolio for 2023. First, let's pull up the charts here and have a look at what is happening. BTC, let's go to BTC USD on Binance as calculated by TradingView. All right, so this is the chart of Bitcoin to the dollar on the daily. Here's my MACD. Here are the RSI indicators. So this is the trend-based fib extension, which is kind of like a predictor of where the future support lines may be. And right now you can see it's actually holding pretty strong at the 2.61 Fibonacci interval, which is around the $15,800 range. What I've noticed though is that there's been a bullish divergence that's just formed on the MACD. So if you compare this low to this low, you'll see that it's making lower lows on the trading chart, but a higher low on the MACD. And it's also oversold. So these two in conjunction form a very strong bullish divergence, but obviously it's not 100% accurate. They're just really good indicators that I like to look at. Now, if we take a different look and we zoom out all the way, so I kind of like this chart showing the previous 3 halvings of Bitcoin, which means that the mining rewards are reduced and the computational energy required to mine Bitcoin becomes harder. So this is the chart of Bitcoin halving dates. It was launched January 3rd, 2009, Genesis block. And the first halving was November 28th, 2012. The second one was July 9th, 2016. And the last one was 2 years ago, May 11th, 2020. So it happens every 4 years. And the next one is going to be anywhere between February to May 2024. This is based on the number of blocks mined. They happen every 210,000 blocks until approximately the year 2140, when all 21 million Bitcoins will have been mined. However, as you can see from the chart above, over 98% will be mined and in circulation by 2028, which actually is going to come a lot sooner than we realize. So going back to this chart, you'll notice that the halving is a very important event because it precipitates the next bull run. It usually is kind of the start of when the next bull run happens. See that the previous 2 cycles have seen about an 84 or 86% drop from all-time highs. And so the prediction here for this current bull to bear cycle would be around another 84% drop. And if you calculate that, an 84% drop from the all-time high of 69,000 would be around 11,000. So it's going to be around this range that will probably see some really strong support. Granted, there hasn't been as much money printing or quantitative easing and potential real recession since Bitcoin was invented. You see, the arc is slowly consolidating and getting, I guess you could say, more mature as the markets get older. So right now it may not be the very exact bottom because we've already dropped about 77%. But another thing I wanted to point out, if you look at all of the previous bull seasons, they last anywhere from like 106 weeks to about 151 weeks. That has remained pretty consistent so far. And as far as the bear seasons, or crypto winters as they've been called, they've lasted for about 58 to 51 bars. So it's reasonable to think that there's a little bit more to go potentially. Now, of course, it's incredibly difficult, if not tactically impossible, to time the exact bottom. So that's why I'm a big proponent of DCA strategies. And I like to do it during bear markets more so than bull, even though I know there's gonna be some maxis and proponents out there that say, don't even look at the charts and just DCA and hodl for life. And to that I say, to each their own. I also want to take a quick look at the dead NFT markets. This is a good indicator of the strong chain activity because a lot of these chains owe a significant portion of their TVL or chain activities to the NFT market, especially during a bull run. And right now you can see that Ethereum is the top blockchain by NFT sales volume of all time. And then you have Ronin and Solana afterwards. And the further down the list you go, the less likely it is that the chain will gain the network effects required or the mass adoption required. And if you look at collection-wise, I would say the NFT market's a little bit too new to have solidified blue chips. But if you want to look at the ones that are the most well-funded, because in order to keep building and giving back to the community and expand and hire, you do need funding. And so this is kind of like a company's runway. In the top 10, you have Bored Apes, you have Axie Infinity, CryptoPunks, Mutant Apes, Art Blocks, Other Deed, NBA Top Shot, Loot, Azuki, and Clone X. And I'm not saying that these are gonna be the ones that will have the most success in the next bull run, but these are the ones with the highest probability of making through the entire bear season into the next bull run. Now let's talk about building the best crypto portfolio. This is how I would personally structure it. If I was just starting out and I had zero crypto whatsoever, my biggest bags are gonna be in the low risk assets. I wanna divide up my portfolio into low risk, medium risk, high risk, and moon bags. Now, what do I mean by moon bags? Moon bags are sort of like those crazy penny stocks that could just shoot off any second based off of whatever current marketing and hype narratives exist at the time. But really they have very little, if any, fundamental value, and they're likely to be rugs. So, this is money that you have to be comfortable with losing. I would weight 50% of the investment in the low risk category, and this is going to be your Bitcoin and Ethereum. Why these two? Because they've been around the longest, they've been battle tested the most, they have the largest market cap, and they're generally the most trusted and decentralized protocols out there. So if you had $1,500, that would be $750. Now, you don't have to do this in a lump sum investment. You can stagger it out over whatever timeline horizon you would like and dollar cost average into these protocols. But I think this period right now is especially great if you want to enter the crypto markets because you want to buy when people are scared and sell when people are greedy. Warren Buffett gem right there. All right, so for the medium risk, which I would allocate 30% or $450 to, because they haven't really been battle tested and proven as much as Bitcoin and Ethereum, but they have a lot of promise and there are some strong fundamental core values in these protocols. So think layer ones. So excluding Bitcoin and Ethereum, because those are also layer ones, other mid-tier layer ones would be things like Binance System, Cardano System, the Polkadot, technically Polkadot's layer 0, but whatever. You have Avalanche, you have Cosmos, which is kind of like Polkadot. They want to be like layer 0, but I'm going to count them as layer 1 for the purpose of this video. You have Algorand. So I also want to mention for the medium risk category that includes L1s, it could also include popular dApps that exist on multiple ecosystems. So for example, Aave, you could have Aave on Polygon, which is a layer 2, or you could have Aave on Avalanche, which is a layer 1, or Phantom, also another layer 1. So some of these protocols are going to fit into more than one category. There's a ton of layer 1s, and in the last cycle, they were billed as Ethereum killers, just as Ethereum was once billed as the Bitcoin killer. The next category is high risk. High risk are L2s, and this I would allocate 10% or $150 to. L2s are the protocols built on top of layer 1s. So these are supposed to bring more efficiency in terms of cost and speed, so that they can help scale layer 1s, which are notorious for being very slow but secure. And that has always been, remember, the triangle, the golden triangle, where you can only have 2 of the 3, and you have security, scalability, and decentralization. So it's very hard to have all 3, but this is where layer 2s come in. They're kind of like that extra jigsaw piece to inherit the security of the layer 1s, but scale the protocol in terms of like higher outputs, higher speeds, cheaper transactions, and etc. A really good website that I like to use is called l2beat.com, and this will show you all the things that are layer 2. It goes by total value locked in escrow contracts on Ethereum, the breakdown, and then all these other details that you may want to look at. You look up the ecosystems of each one. So for example, Arbitrum ecosystem. Arbitrum 1 portal, you'll gateway into the ecosystem. If there is no native token for an L2 protocol, what you can do instead to get exposure is to pick up some of the tokens from their popular dApps or decentralized apps on these protocols. For example, Arbitrum does not have a token yet, so you can't directly invest in Arbitrum or gain exposure. What you can do though is look up Arbitrum ecosystem, and it'll show you all of these different dApps. I would personally look at the network effects of each of these protocols, and basically look at the market cap, how many tokens are in circulation, what percentage of total tokens are already in circulation, and what's the vesting schedule. Those are just really important basic questions to ask yourself whenever you look up new tokens. So for high risk, you can have coins like GMX, or you could just simply use the L2 coins themselves. Like you could get Loopring that has a token, Optimism already has a token. But go through the list, I'll link it in the description below. There's tons to choose from. I would personally pick like the top 5 or 6 just because of network effects and critical mass. Now for the fun one. For the moon bags, I also like to allocate 10% or $150 to because these are the coins that explode off of whatever the mania narrative is. If everyone's talking about how Elon's gonna go on SNL and potentially tweet about Doge, buy Doge. However, if it's already pumped significantly, do not get in unless you want to be exit liquidity. This one is harder to pinpoint which ones will pump because it may not be the ones from the last cycle. It could be completely new ones, and they've kind of been new every cycle, I would say, because the one before the last bull run, we had ICOs. They were all the craze. You had like your BitConnects and OneCoins and super overly charismatic mindset gurus that talked about how this ICO is going to make you rich, basically like your get rich quick schemes. Those don't usually pan out well. What is Elon or some other major influencer gonna tweet about and make waves about? So that's why I highly recommend staying up to date on current events, so you kind of can like get a feel for what bubble is blowing up. Speaking of current events, quick look at the headlines just to get an idea of where we are in the waters. Because there are some things happening. So you know how I said that there's going to be strong resistance likely at the 11,000, maybe 10,000 Bitcoin range? Well, the fallouts from these headlines may just be the final catalyst for that to happen. And let me show you why. As of today, crypto lender Genesis lays off 30% of staff according to Wall Street Journal. Cryptocurrency lender Genesis has cut 30% of its workforce in a second round of layoffs in less than 6 months. Their lending arm, Genesis Global Capital, froze customer withdrawals on November 16th following the collapse of FTX. So we're still kind of seeing how this is playing out. So if it actually does file for bankruptcy and implode, it's just going to add to the contagion. So Barry Silbert, who founded DCG or Digital Currency Group, has about $2 billion in debt. They have a liability to Genesis Global Capital. There is a $1.1 billion promissory note that is due this year in June because DCG stepped in and assumed certain liabilities from Genesis related to the Three Arrows Capital default. And the founder of Gemini, Cameron Winklevoss, and an apparent Creditors Committee has given DCG a deadline of January 8th to repay $900 million owed by Genesis to Gemini Earn, which was their yield earning offering to customers. And so a bankruptcy may well mean the liquidation of the Grayscale Trust, although Silbert has tried to firewall DCG and to contain any Genesis fallout. In just a few days, we're going to see potentially another fallout from this whole contagion of events stemming from last year with Three Arrows Capital, Do Kwon, Celsius, BlockFi, FTX, and now we may potentially have Genesis, DCG, Gemini, and Grayscale, which has quite a bit of Bitcoin and Ethereum. Another thing to keep in mind is this year is probably going to see a lot more regulations in the crypto space. And this might actually lead to DeFi Summer 2.0, because if they're going to bring really harsh regulations on centralized finance and centralized exchanges, then that may actually push a lot of people to use decentralized finance or DeFi more. And you also have Celsius ex-CEO Mashinsky finally getting sued by the New York Attorney General. She is seeking restitution, damages, and to bar Mashinsky from ever doing business in New York again. And then all the way back to the very first start of the contagion, Three Arrows Capital. They have finally been served a subpoena via Twitter due to whereabouts unknown. I don't know why it's taken this long, honestly, but at least it's finally happening. Keep an eye out on what's going to happen with further bankruptcies. In summary, I think L2 will have its season next bull run. I've said that before in my previous videos. And you combine that with the possibility of a DeFi Summer 2.0 due to increasing regulations, and you have a very good case for stacking a few of the top coins from major L2s and DeFi protocols for the next bull run. That's it for this video. If you want to see more content like this, make sure you like and subscribe. And thanks for watching. I'll see you in the next one.